Welcome to this first part of the blog on digital transformation and business strategy for financial institutions with Q-Lana. My name is Christian Rummer. I'm the CEO and founding partner of Q-Lana. We have developed a low-code based open banking, digital lending and asset management platform. Our platform is used by multiple financial institutions in lower and middle income countries and by asset managers around the world. In this blog, we like to share with you our expertise and ideas about how to organize financial services, how to develop a successful business model for the next decade, how to manage risk, and how to implement all the ideas and concepts at the right speed and sequence. Banks have been called out as archaic and slow in the past decades. When I started my career in a financial institution in 1989 in Germany, one of the first speeches I listened to came from a highly reputable member of the management board of Deutsche Bank, Ulrich Catellieri, who branded banks as the steel industry of the 1990s. This warning was barely taken seriously at that time, and even multiple crises in the banking sector, whether regionally or globally, seemingly left the business model of banks rather unchanged. Beyond the normal evolution of products, technology and work environment, not much changed. Over the past decade, the appearance of fintech companies seemed to finally push traditional financial institutions to the brink of extinction. Driven by allegedly disruptive technology, but fueled from my perspective by an incomplete understanding of the function of the financial service sector and outrageously cheap funding, many of those fintech companies disappeared over the past years as quickly as they became recognized. Yet, the banking sector now finds itself at the forefront of digital innovation. As customer expectations evolve and the demand for seamless, personalized experiences intensifies, it has become clear that the time for digital transformation in banking is now. At Q-Lana, it is our mission to strengthen financial institutions to provide better and more impactful financial services for customers. We achieve this through a focus on knowledge-based lending while emphasizing the human aspect of digitalization. Our work is focused on a combination of technology and advisory to ensure that the concepts and tools that we offer are well implemented and meet the expectation of our clients. One of our goals is to demystify complex topics around technologies and financial services. As usual in new business sectors, buzzwords and jargon create a layer of confusion around often very simple and logical concepts. Let us give you an easy example here. Expressions that are often mixed are digitization, digitalization, and digital transformation. What do they mean? Digitization strictly describes the process of converting information stored in analog formats like paper, voice, or pictures into a digital format, so that computers can store, understand, and treat this data. Most financial institutions have been actively digitizing their activities for decades. They've been implementing systems such as core banking software or management information systems to store and automate the processing of business information. Digitization lowers turnaround time and can overall improve the portfolio quality due to a more systematic and optimized collection, processing, and analysis of customer business data. Digitalization refers to providing financial services via digital channels. This can be achieved via financial institutions on their own or in partnership with other firms. Digital financial services can be offered jointly with e-commerce providers and payment service providers, or for example, mobile network operators can be partners with their mobile wallets. Let's have a look at an e-commerce platform set up by a financial institution as an example. In this case here on the screen, it is about a financial institution with a strong retail operation in a fairly mature market. To promote the interaction between its individual customers and its micro, small and medium-sized enterprises, abbreviated MSMEs, the bank offers these MSME customers the possibility of setting up an e-shop as a value-added service and accepts digital payments, for example, by cards when selling their goods and services to, for example, individual customers. These customers can also shop at these MSMEs using a consumer loan streamlined on the online sales process. Thus, the institution achieves an expansion of the volume of its activities. Finally, let's talk about digital transformation. Digital transformation is a longer-term evolution of the nature and businesses of, in our case, a financial institution. Digital transformation will radically change how banks operate, what their business lines look like, and how they will interact with the whole financial ecosystem. We expect that, subject to local laws and regulations, within the next decade, most financial institutions will have to transform, to open their systems, and to learn how to cooperate with other sorts of firms, fintechs, and others. One obvious and already existing novelty is open banking. Financial institutions provide their existing infrastructure and systems as a service to different types of non-regulated companies. For example, e-commerce portals, insurance companies, remittance service providers. More and more countries will navigate towards this system. We're now at the end of the first chapter of our Digital Transformation and Business Strategy blog series. In the next section, we will speak about the steps to prepare for digital transformation.